probability trading strategy, you're full of crap.
Things aren't working, then that's a quick trip to the poorhouse.
To learn how to drive the beater before you can drive the Lamborghini.
Now you're playing with the house's money.
Hey guys, what if I did tell you that watching price action all day long, chasing consistent profits, and aiming for a perfect win rate is probably costing you trading success? Are these things, are all these things happening to you, and are they holding back your trading? Today, we're joined by Andrew O'Connell, the trader. He's a trader who is currently leading the 2024 U.S. Investing Championship with a jaw-dropping 409% year-to-date return. And he's here to expose the trading myths that could be sabotaging your trading. Hey, good morning, everybody. I'm Dennis, or good afternoon, depending on where you're at. I'm over here in Hawaii. I'm Dennis Wilborn from Autopilot Trading. My co-host, Mike Lamothe, founder of Mara Wealth. And together, we debunk market myths and shed light on truths that can transform your trading and your trading mindset and your results. So, Mike, take it away and introduce Andrew.
Yeah, Andrew, thanks so much for being on the show, man. It's a real pleasure to have you here with us.
Yeah, thanks so much for having me on. Yeah, looking forward to debunking all of these myths.
Yeah, right. One thing that I noticed here, that I just thought that this was funny to see, right? So we've got each of us here, and it almost looks like we're sloping up, right? The way that our heads are. Anyway, yeah, Andrew, so tell us a little bit about yourself, your past journey, how you got in here. I read a little bit about you had some experience with Vanguard and then transitioned over. Walk us through.
Yeah, sure. So, yeah, it just goes back to my childhood. I've always been very competitive and I've loved playing games. So I grew up with, I was always the youngest one in the family, grew up with older brothers, older sister, cousins, friends, everyone around. And we were always very competitive, whether it was like running around the pool, who could do it the fastest, all that stuff. Always into games and competition. And that really translated when I was a teenager. I got really into tennis.
Okay.
And I got super obsessed with it. That's been another theme throughout my life. I pick things up and I go really deep into them. So yeah, played Division I tennis in college.
Wow.
And found myself getting curious about the financial markets really as tennis was starting to wind down, and I knew I had to find something to actually do for, a real career. I'd been working as a tennis instructor over the summers. I got into financial markets, and I just kind of realized, I was about like 21 years old, that, hey, this is another game. It's just like tennis or anything that I've done throughout my life. And there's a meritocracy to it. There's people that are good at it, people that are not so good at it. And, perhaps there's some level of mastery you can achieve within this craft. So I really just got hooked on the markets and really just devoted myself like, okay, I'm going to learn this stuff. So yeah, I started studying for the CFA exams when I was 21 and really started to learn fundamental analysis. And I opened up a brokerage account and I started trading as well and really just dabbling. So at first, like, I was not on social media. I had none of those influences. So in the beginning, it was like, I want to be the best at this, but I don't even know where to learn. Like, I just had no idea what to do. I was just Googling stuff and trying to figure it out. So I ended up finding kind of like a sweet spot for myself where I was just reading the news and I was just trading off of news headlines. And finding little catalysts and changes in sentiment, that sort of thing. And I found some early success with that, which was good. So I had some early wins, early gains, and during that time, I was working at the Vanguard Group, and I started there as a brokerage associate. And my goal was always like, I want to be a portfolio manager or a trader there and get over to the institutional side. And I was able to get over there. I secured a role on their fixed income trading desk. So I had like my nice Bloomberg terminal and like 4 monitors set up. And I was working as an analyst over there for a few years, which was awesome. I ended up getting into this accelerated development program at Vanguard. It was called like their IMDP program. I was like the one internal hire, and I was so stoked for it. And I ended up getting kicked out of the program before the program even started. I had
Oh
been
man.
racking up like compliance violations, just for my own personal trading. And yeah, it's pretty much like if you work at one of these big asset management shops, you really can't trade on your personal account. So yeah,
Hmm.
out. It was like a trail of tears. It really really sucked. And around that time, that's when I decided to go full time in trading. So yeah, went full time. Had some really big struggles and setbacks, and those include like at one point I sold my car. I had no way of getting around. Like I was waiting tables. I had to go back into the workforce for a short amount of time, and was able to just kind of put together a system that works for me through trial and error and making mistakes and all that stuff. And yeah, it culminated last year. I got 103% return in the U.S. Investing Championship, and now this year I have my over 400% return in the contest as well. So the goal is just keep it moving now, and just develop a track record.
That's fantastic. So, uh, what what would you say is different from where you started to where you're at right now? Like, well, what was some of the leaps that you made? You mentioned that you were trading off of news headlines, and that worked for a little bit. Are you still doing that? Is that still a part of the process, or is it very different? Well, walk us through.
Yeah, so I found a natural knack for just looking at the news. And then as I started going through the CFA program, analyzing fundamentals as well. So when I was doing that, I was finding success. And then the other thing that was really interesting was that I would make like, maybe 4 to 6 big trades a year. And other than that, like I was not really trading every day. And, I wasn't
Mm.
like looking at every tick of the market. In the beginning, I did not use charts. And I was doing very well in the market without charts.
Mhm.
So when I first started, I tried to completely change my trading approach. And I was like, I need to do like cash flow trading and like make consistent money in the market. And I changed everything. I stopped looking at fundamentals, stopped looking at news, tried to do pure technicals. And that just didn't work for me. And I spun my wheels doing that for, over a year. So when things started working well, I actually went back to my roots. I went back to swing and position trading. I went back to reading the news, some macro stuff like economics, fundamentals, and then I layered in the technical analysis that I
Right on.
picked up from spinning my wheels for a year. And I found when I added the technicals to what I was doing, it just made it so much better. And the risk control was a lot easier. And yeah, it just came like having a good system, breaking it apart, the system not working at all, and then just kind of blending things together again. And yeah, now my approach it's very blended and it just works well for my personality.
Cool.
Yeah, that's
So,
super interesting. If I can add, well, one more follow up question to this, and Dennis, I know that we want to get into some of the myths that we want to debunk, and there's actually a couple of them sprinkled in there that you mentioned already. But
Yeah.
something that I've like we're all basically looking at and trading the same kind of stocks and have somewhat similar views of the market.
mm,
Something that I struggled with, and maybe you could help me with this. So I would look at news way back when, and I would get pointed in the wrong direction and ended up getting emotional and making the wrong all sorts of mistakes by that. So I took all right, I'm not going to look at the news at all as far as my trading decisions go and go based purely off of the chart. So yeah, and that's something that I find that works for me. So I'm curious how when you're looking at the news and then you lay over the chart, well, how do you go about doing that? Well, what do you see? How does it help you? Walk us through a little bit of your thought process.
Yeah, that's a great question. So now the way that I think about it is there's the chart on the chart that you're seeing, the technical analysis, and that's a great way of seeing like what is actually happening in the market. So when
Mhm.
people don't use technical analysis or the chart at all, they're just missing out on such a big piece where
right
like they
on.
don't know if Yeah, they don't know if a stock is being accumulated, distributed, like if it's range bound. Like it's good to know just like what do people currently think about the stock. That's how I
Mm,
think about it. And then the fundamentals are really just like what's underpinning this move. Is it like big earnings? Is it big sales? Maybe there isn't really fundamentals underpinning the move, and that's okay too. And a lot of times there's huge moves without big earnings or sales growth. But I like to know like what's going on there. And then the news is really the stories that are driving the market because humans are really the ones making all these decisions, and humans are not rational. Humans don't just look at the fundamentals and make all their decisions based on the numbers. Humans like to be persuaded and sold on ideas. So, really reading the
Right.
news and reading about the companies, I just get a lay of the land of like, what's the story? Like, why are people buying this? That sort of thing. So,
very
using these
interesting.
three disciplines, what I find is I'm constantly A B testing things where like I'll read the news and it gives me sort of like an opinion or a bias on what I think
Mm,
should be happening. And then from there, I will look at the technicals and see if they are confirming that. And if the technicals are not confirming my view, that is where I'll say, hey, my view is probably wrong. I'm not going to roll with that view. I'm not going to take a big trade based off of that view. And I
mm.
find my best trades tend to come when the story is there, the fundamentals are there, and then the technicals line up as well. That's where I can take big size in a trade. If I just have one of those elements, I can't really have the conviction to take a big trade.
Right on.
Interesting. Is
Right
is the
on.
institutional sorry, one more follow-up to that. Is the institutional side also looking at the news like the same kind of newspaper that we're looking at?
Oh yeah, they
Oh, great.
definitely are. Like for example, Bloomberg. Like
Right?
Bloomberg is pretty much like, fully infiltrated all of these big asset management shops. So like when a story appears and it's like the front page story on Bloomberg, like I know
Mm,
just from working on that side, like how many investment professionals are going to be reading that story, and that's going to
Mm.
be influencing how they're thinking about, whatever that story is about. So that's where like I find there will be times where the news is saying one thing and then the chart is saying something different. And
mm,
sometimes that's where I think there's an opportunity because I'm like, hey, everyone is reading this and the market is actually doing something different. So this could mean there's a really good opportunity to follow the price action while those guys might be a little bit confused reading that news. So I'm kind of just like uh going with all these strategies and just kind of always A/B testing what's happening.
all right, very cool.
Cool.
Dennis.
That's good. Hey, Andrew's going to also be pulling the curtain back on what sets his championship routine apart from everyday trading process. And so you don't want to miss that. We'll get to that shortly, but we're going to dive into those myths right now. So, Andrew, you ready for the myths? Now, these are ones that you suggested to us, and I love and I love every one of them because they fit right into what Mike and I, do, and talk about almost every week. But the first one is uh, the myth is traders need to spend all day watching price action. So, Andrew, why do you think traders believe they need to constantly monitor the market?
Yeah, I think it's like this illusion of control that people think like if I'm watching the price action, like I'm influencing the outcome.
Mm,
And I
yep.
think almost no one would admit to that, but it's really like why else would you be doing it? Like if you can set an alert, like hey, my stop out point is, 3% lower. If it hits my stop, I'm going to be out of the trade. Then at that point, it's like there's no need to just, constantly stare at the screen. And then the other element too is like if you spend some time doing your analysis and you look at the charts, you look at all the indices, you look at the sectors, you look at individual stocks, like you go through your whole routine. Like if I do that whole routine on Monday and then, 12 hours rolls by, it's Tuesday, and suddenly like I have to redo all of that work and I have to spend another full day like looking at the price action. In my mind, it's like, well, how bad was my analysis the prior day?
Mm,
Like, especially if the market didn't move a lot, then it's like why am I obsessing over like I just think there's the good element of doing your analysis, but then there's also the sense of like overdoing it, where
Yeah.
there's not much you can control. So yeah, unless there's like big volatility in the market on those kinds of days, I will be more like glued to the price action.
Right.
But if it's like, oh, Nvidia earnings are coming up in 2 days, for that,
Right.
it's like you might actually just be spinning your wheels if you're looking at the chart the whole day. So it's kind of like knowing where the market is and knowing if there's a big catalyst coming up, like that sort of stuff helps.
So do you think it is a issue of, you mentioned control and this false impression of being able to control, or false belief about controlling the market by sitting there and watching it. I mean, I'm one, I've been trading for a long time, and that's one thing that was just hammered me when I first started is I said, well, I have to be glued to the computer all day long, watching the charts and all that kind of stuff, because I have to be ready for the move. And the fact of the matter is learning some really great technical analysis developed in my system. I no longer had to watch the market. Matter of fact, living over here in Hawaii, I don't like getting up at 3:30 in the morning to go, get ready for the market, right? So
Yeah.
I trade on the weekends, put in my conditional orders, and I trade, the final hour of the day when I'm awake, right? So that false belief that you control something. And what about the emotional aspect of watching watching the charts or watching your screen all day long? That do you believe that accelerates or increases emotional levels and therefore reduces our ability to make good decisions?
Oh yeah, it definitely does. Like especially like if you're a day trader, then maybe you do have to look at the screen a lot more. And I think that's okay. But like if you're a swing or position trader, um, it's like really the close is what matters the most. So like this will still happen to me. Like a stock will, I'll be long a stock, it opens down 2%. And I'm like, oh shoot, what's going on here? Like this stock is
Mhm.
down, like, I might get my
Mm,
stop taken, and like your emotional triggers just start going. And
yeah,
then it's like, oh man, now it's down 3%. Like, what's going on here? And then, by lunchtime, the stock is green. And like, the stock finishes up 2% on the day. And you've had a huge emotional roller coaster. And it feels like, man, I put in a shift today. Like, I put in some work
Mhm.
today. And it's like, if you had just, looked at the stock on the close, like, you would have just been like, oh, nice, my stock went up. So
okay,
when things like that happen, it's like you have to ask yourself, like I ask myself this all the time, like, what am I actually doing looking at this action? Like the other element too is I notice, like I work with traders and a lot of people burn out very easily from trading. And it's
hmm,
because like, they want to look at every single, bit of price action. And then like the news
right,
comes out, they want to look at every single bit of news and like, oh, they're following people on Twitter and they want to see every single tweet. And it's like they go all in on this. And then when you have like I'll have months where I'm negative on the month, or like, 2 consecutive months, or, periods where my account's not moving at all. So if you're spending like 12 hours on the market every day and
yeah,
it happens to be a month where you're red, you're going to feel like I just wasted all of this time. So especially when things are not going as well or things are slower and your account's not moving as much, I find like it really helps pare back the number of hours, because then it's really like your ROI on your time is getting better the less time that you spend, looking at it and obsessing over it.
right on, right on.
That's
So,
great. Well,
Mike, you got to follow up in that
yeah,
area on
yeah,
this
I,
one.
I really do. So, for those months where it's been like a flat month or even a red month, has any of that happened this year during
Oh
the?
yeah. Yeah,
So,
the in January I was negative. I think I've had 3 negative months this year. And yeah, January I was negative, I think 2 more months. So yeah, it's kind of like in order to get past those red months, you know, your process has to be sustainable and like emotionally sustainable, sustainable with your other priorities in life. So yeah, if you're like, oh man, this month like I'm down 2%, so like I need to just be like looking constantly. It's like, I don't want to spend like 200 hours on the market in a month and then like I'm negative on that month and then I'm really like, what am I doing here? And that's, I think, why a lot of traders quit, because they go, I put in all of this time and like I actually lost money. Like I'm over
Mm,
this, and they quit.
mm.
Whereas for me,
Well,
I want to be in this game for, the next 20, 30 plus years. So it has to be sustainable.
yeah.
Right.
Well,
And for a lot of people, though, what they'll do too is they'll be like, oh, this didn't work 2 months in a row. I'm flat. I'm red. Let me try something else. So,
yeah.
did you change your process at all this year?
No.
Or it's just been the same thing? All right, flat. All right, this month's a little bit down. All right, now we're starting to get some traction. Is it more like
Yeah.
that?
Yeah. For me, like at this point, my system's pretty dialed in. Like I can make tweaks or enhancements, or like maybe change little like setups or, things like that. But yeah, even when I have like a negative month, like I had a losing streak and I think it was like October, and I
Hmm.
lost, I think, like 8 trades in a row, and I did not do anything differently from my process at all.
Hmm.
And it was a negative month, whereas like, maybe the prior 3 months I followed the same routine, same process, and
Yeah.
got really good results. So for me, it's
So,
also important, like just because I have a good month in the market, that doesn't necessarily mean like I traded super well. And if I
mm,
have a negative month in the market, that doesn't necessarily mean that I did a bad job trading. It's really just like it's probabilities, and that's it. So
yeah.
it's very tough to deal with that sort of stuff as humans, but
Hmm.
over time it's gotten a little bit easier.
You
I
know, when
really
you,
hope that everybody out in the audience that's listening to this is taking good notes, right? Because here you have a guy that started off the year flat, negative, and is now up 400% on the year, not deviating from his process, not saying, oh no, this isn't working out, let's go change something else. This guy's winning the US Investing Championship. He's in number one right now. We'll see how it goes out, but this is what you need to do. I love it. I love it. Dennis, go
so
ahead.
yeah. Um, Sorry, Mike, I forgot what I was going to ask. And so, but it had to do with, you basically, at least, it's been my experience, and I hopefully yours, you've got your system established. You've done
Mhm.
back testing on your system, and you've done forward testing because you've been utilizing it for now years. And I know that oftentimes when I coach people, they also come in and, I feel bad, not too badly, but I feel badly when somebody comes in, and let's say they came in August of this past year for coaching. Well, August, September, and a little bit of October sucked. I mean, it was, I had, two of those months also where I was on the downside. And I
Mhm.
kept telling them, said, well, they didn't have a level of experience high enough to where they could trust not only the system, because they hadn't seen enough iterations and reps on the system, and they also didn't trust themselves because they hadn't learned the system. And so I
Mhm.
think that's a combined, at what point, how long had been you approximately how long had you been trading before you got to the place where you trusted your system and also trusted yourself so that well, my system, I'm operating within the parameters of my system.
Yeah, I think it takes a while to put the package together. I think I'm kind of like a unique case where I sort of had like the experience where things started working for me well right away. So I kind of always have like this confidence where it's like, hey, I'm pretty good at this. Like, so long as I don't make any big devastating mistakes, like I should be okay. But yeah, I think it takes a long time, and it also takes like seeing a lot of different kinds of market environments,
Right on.
like seeing like, maybe 3 or 4 times a year the market just rips higher, and like, everything runs, meme stocks run, like there's stocks on news headlines going up 20% in a day. Like that's a normal, that's like a feature of the market. Like when sentiment gets a little bit hotter, like that happens. But I always know, like, just because that's happening, it doesn't mean that the market's going to be like that forever. And then there's
Mhm.
also sequences where there's, down trends, and things aren't working, setups are failing, like that sort of thing. And so these things in the market, they just keep repeating: uptrends, downtrends,
Yeah.
meme rallies, blow ups, news failures. Like it's all just repeating year after year, these same things happening. So you do have to experience like a good few years and like a good variety of different market conditions before you start realizing like, it's just going to repeat again. So that's the other thing. Like if you say if there's like a good run in the market, and like a lot of times it'll happen, like I'll miss that run. And like,
Mm.
there'll be stocks moving and like, I just missed it. And I see these stocks just like hitting new heights. And for me, it's like, you know what? I missed that. I know it's going to come around again. So
Right on.
I'm just going to sit this one out. Like, I'm not going to like then be that person that's like, oh, well, now I'm getting in. Like, I got to chase this thing and just go for it. Cause I know that's typically, soon after that, then a lot of these stocks just get obliterated.
Right
So it's
on.
just like,
Right
hey, if you
on.
miss something, there's always another chance. And like, if you mess something up, also, like, the market was in a downtrend and like I just didn't control my risk right. And, all that stuff, like, you always get another chance. So that's
Yep.
like, it just gives me hope. Like, you're always going to get another chance at all of this stuff.
I love that. Love that. So, Andrew, one of the other myths that you talked about is the myth that traders can make consistent daily, weekly, monthly income. And so, why do people believe that, and why is that so misleading?
Yeah, I think people believe that because, like, it is unfortunate. A lot of times I'm like, why does everyone believe this stuff? Like, it's nonsense. But it's really like a lot of what the industry kind of feeds us,
Mm,
because there's a lot of people that want to sell you products, sell you software, sell you investment research, brokerage services, like whatever it is. There's so many people that want to sell things. And a lot of times, like those business models are aligned to where, like, hey, let me tell people like how rich they can get trading, like how easy it is, like, the consistent gains they can make, because then they'll
yeah.
buy this product. So I think it's like we're constantly getting fed information that may not necessarily be helpful to us. A lot
Mm,
of it is actually harmful. So we kind of develop these beliefs about the market that are just totally not true. So
mm,
it's really tough. Like everyone falls into it, and it's kind of sad, but it's just like it's the nature of the beast. Like 95% of people don't make it in trading.
that's
So
right.
like anyone that says like, oh, this is just like easy, like, you can do it, like that, you just have to really like think to yourself like, hey, if 95% of people don't make it, like probably 95% of what I'm seeing out there in this industry like might not be super helpful.
Wow, that's
Yeah,
good. That's good.
yeah,
So
exactly.
you kind of you're not one of those Lamborghini guys. I know because I've looked at your background. You are not one of those guys.
No, I'm a Corolla guy for sure.
Okay, a Corolla guy. I love that. Um, so you've given some good advice to the traders who basically have that. Part of the thing is just what kind of questions would you tell a trader to ask themselves if they're struggling with that myth?
Yeah, I would say just kind of look at your own results. Like I think that's where a lot of it comes down to, like, look at your own experience that you've been having. And like if you look at your own experience and like, man, like, I was up 3 months in a row and then I was down 4 months in a row, or it's just been kind of rocky and a roller coaster. Like I think you just have to start off with that. Like that's your base case, that's your experience, and then just try to improve upon that. Like if you can work on some mistakes or repeated behaviors. Like I notice with my trading, a lot of times when I mess up, it's the same repeated behaviors over and over again
Mm,
that
yeah,
always lead to my mess ups.
yeah.
And it'll be like similar kinds of market environments, similar times of the year. And yeah, so if you start understanding like, hey, these are my weaknesses in trading,
Mm,
you know, then you can really start working off of it. But it's really like it's all about yourself. And you can't really just like skip from like zero to hero, so to speak.
right on. So,
Yeah. And then
Micah,
the other, oh yeah,
yeah,
the,
go
one
ahead.
more one more point on that. Like in terms of like the myth about like consistent money in the market, like what I like to do as well is I like to look at like what have the indices done over like the last month or the last 6 months or the last year.
Mhm.
So like if you look at and you see like, okay, the indices were up, over the last 6 months, like consistently up. Maybe in that kind of market environment, like, yeah, you're consistently profitable because like the market was up all those months in a row.
Right.
But then there might be another environment, like we had in the most recent bear market, where it's like, okay, the market was down 4 months in a row. So once you start realizing like the market behavior is always different, and it's, kind of like this manic behavior, it's like, well, how would like I be able to just like extract the same level of money from the market every single week if the conditions are always different? I think
Mm,
that's the main thing. The conditions are always different. So like what you can achieve in the market at any given time is always going to be different.
mm. Mike, you got a good follow up in there?
Uh, yeah, before we get too far away, Caleb asked a very good question in the chat about 95% of people don't make it. What's the time frame you use to determine if somebody has made it?
I think as long as you don't quit, like you're still in the game. Like that's
Right.
really how I see it, because I think everyone has like a certain time frame where like if they're dedicated and they commit to learning, someone might just pick it up and maybe like in 2 or 3 years, like they've got it and they're doing okay. And then someone else, like it might take them like 7 years or like 8 years. So I really think it's like once you've quit, then officially like, okay, I didn't make it. But as
Mhm.
long as like you never say quit and you just keep
Yeah.
going and keep improving, like you always have a shot. So yeah, I don't I think it's different for everyone, that time frame.
Yeah,
That's good.
totally. Well, like
Oh,
it's a marathon.
yeah.
Right? Like we were talking before uh, like you're an athlete. Like I've run a couple of marathons, and I remember like the first trying to get to that first 26 miles that I ever did. And if you're thinking about the end the entire way, it seems impossible.
Yeah.
But if you focus on the next steps right in front of you and you keep going, you get there and it's like, oh, I'm here.
Yeah.
Yeah. Yeah, it's so true. And like, yeah, you only know these things like once you reach the end of the marathon. Then you can be like, okay, what was my time? Like, how did I do? Same thing with trading. Like, you only know how you did when you hang it up. So, like, even for me,
Mhm.
I've had a couple good years now in a row, and I'm very reluctant to ever be like, oh, yeah, now I've got it figured out. Like, now I'm the
Mm,
expert or whatever, because, maybe 5 years down the road, then something changes or something else happens. Like,
right.
you only know, like, when it's all said and done, like how you did. So it's really just, yeah, for the meantime, like you said, like you just have to stay focused on the upcoming session, like, just try to do your best, and
Yeah.
that's all you can do.
Yeah. That's one of the things, that I've learned in the time that I've been a trader is that one has to continually sharpen their saw. If they're not
Mhm.
continually sharpening the saw, one, you become dull, and into some cases you become deaf and dumb to the market.
Mhm.
With respect to what's going on. One of the things both you and Mike mentioned here is that, especially in this myth about pulling money out of the market consistently, while there are strategies that can help you do that, the fact of the matter is that having a goal of X dollars, I think, is in a way not necessarily a bad thing, but that's a goal that you really have no control over. What you have control over, though, is your process and focusing on your process and being a master of your process and basically grading yourself. How well did I execute my process this week? And if you get hit with 5 or even 10 stop losses in a row, if you've obeyed your process and you've done this enough time, you know that eventually it's going to come back for you, and you can give yourself a grade of A because you followed it. You didn't violate the aspect of your trading. So that's what the OG says.
Mhm.
Sure. Yeah. Yeah. And like, you never know, you might have a period where things aren't so hot. You take a bunch of stops. Like, so long as you're taking the stops, like if I were to look at a trader and I see like they're not doing so good, but they stop out every time that they're wrong, that kind of trader, like I would say, like you're definitely going to make it. Like if
Yeah.
you obey that.
Yep.
But if you double down on losers, which I used to do, if you double down on losers, it's almost like for sure you're going to get knocked out at some point. So I would say like you don't even have to focus on like, okay, I'm going to turn profitable and like start making a bunch of cash in the market, if you
Yeah.
really focus on like every time I screw up, I am going to take the stop, then it will only be a matter of time before like, some good luck comes your way and,
Yeah.
something good happens and your setups work and like, you have a success.
And so,
How uh, how important would you say it is to define your setup
Mm,
and to have a clear definition of your setup?
that's a great question. I think it really depends on the trader. Like I would
Okay.
say for me, when I started off trading, I was doing everything intuitively and things were working out well for me. Whereas like there might be other traders, like I know other traders where they're like, when I started off, like I was just terrible. And, I read William O'Neill's books and like I learned that system and like then I became profitable because like I learned every detail of that system and like I mastered it and like wrote out all the setups and then, I achieved success. So I think it depends just like how automated your system is,
mm,
or how discretionary your system is. Like I have all of my setups written out and I have like a trading plan that's like a 30-page document.
Hmm.
Um but yeah, a lot of times like once I have that set up, a lot of times what I'm doing is very intuitive and I'm not like going to like a checklist before every trade and like ticking every box and I would say
Oh,
I'm more
sure.
discretionary in that sense.
But is a
cool.
lot of that stuff in your mind like, oh yeah, like this looks a lot like it might not be something that you're sitting there manually checking off, but you see it like you know it. It's not like here's a random thing that oh yeah, that kind of looks like a cup and handle or something like that.
Yeah, yeah, I definitely think like writing it all out, getting your thoughts on the page, like that definitely helps.
Right
And yeah,
on.
then I think it comes down to like experience and just kind of like trusting the work that you've done. Yeah, I think at some point like you do have to trust and like you have to know like, okay, I've seen this a million times. Because sometimes too, like you'll see that A+ setup and then it's like, but wait, the volume's not there, something like that. And
Mm.
then you don't take like your A+ setup, and then maybe that was like your A+ setup that appeared and like it doesn't appear again for like another like 3 months. So yeah, it's important to be as like structured as you can be, and then you also have to be like willing to pull the trigger and just
Right
like,
on.
I'm gonna do this and I'm comfortable at this risk and here we go, I'm in it.
Yeah, ticker sense.
So, in getting comfortable and I don't want to jump too much into the questions we're going to be asking that people have sent in, but in getting comfortable and pulling the trigger, do you utilize automated trading? In other words, conditional orders in order to get yourself in and out of trades?
I do a lot of automation on stops, but for entries, for the most part, I'm doing manual entries.
Okay.
And I think that's something where in my trading, I would like to evolve that over time and
Okay.
become a little bit more automated. I think that would be fantastic.
Okay.
So I definitely think like so long as you're pushing the buttons on all of your trades,
Right.
the potential for human error is always there. And then the more that you can automate or systematize, like it's almost like having like a robot that's just, helping you with your
Yeah.
trading. Everyone has that to a different extent, but it definitely helps when you offload some of this like cognitive bandwidth where you don't have to be like reinventing the wheel in your mind every day.
Yeah. Yeah.
Mhm.
I find that's very beneficial. Because I do have all my trades utilizing conditional orders, both entry and then that triggers that if I get into the trade uh, uh, mechanically through the automated system of the conditional, that automatically then generates my exit orders. So I don't have to worry about either way, and which
Mm.
works really well. So
Interesting.
Yeah.
Andrew,
And we've got
yeah,
sorry, Dennis. Just wanted to jump in with one follow up question to that. So, because we have a pretty wide group of people in the audience. Some of them are beginners, some of them are intermediate, some of them have a lot of experience. At what point do you think that automating is a good idea? Um,
mm,
is it good for everybody? Is it good for a certain stage of development? Well, what do you think?
Yeah, I think once you have something that works, like once you have it and it works and you're comfortable with it, and maybe you've executed it manually a bunch of times and like, you just know like, hey, this, if I do this over the next 5 years, like most likely it's going to work out okay for me.
Right
Then I
on.
think from there, then you can be like, okay, let's add in some automation or some sort of decision support. Like within
Mhm.
my process, I have a lot of decision support where I do a lot of like Excel modeling, and I've got like these crazy workbooks and all this stuff. And it's kind of like pointing me in the right direction and
Mhm.
kind of like helping me follow the market roadmap. So I can kind of see like, what am I doing? And like, what are my models kind of telling me? So I kind of approach it that way. But then I think the next level is like, hey, maybe some of these models, they can start doing some of this work for me. So I think it's kind of like everyone's at a different level.
Right.
And I think like if you have no automation at all, like there's always room where you can add a little bit more. And then I guess the full extent would be like a fully automated strategy, which may or may not be for everyone.
Right on.
Mhm.
Right on. So Andrew, can you break down why focusing on win rates can be misleading to traders?
Yeah, so this is another huge one where like, especially for me as well, people see I'm doing well in the contest. So they just think like, oh, this guy, he must be winning every trade. Like he's gotten way better at this. Like that must mean that like, the better you get, like the more trades you win, the less trades you lose, that sort of thing. But losing trades is just like, it is just totally part of the game. And almost everyone that I've seen that does really well in trading, the win rate is never like incredibly high. Usually it's somewhere between like a 30% win rate and maybe on the high end like a 60% win rate, like
Right.
somewhere in that sweet spot. And I think that's also a huge edge. Like as humans, we don't like to be wrong.
Mhm.
That's
So
right.
we don't like to stop out of losing trades. So it's almost an advantage if you're running a system that has like a 45% win rate or a 50% win rate, which is kind of where my system is, somewhere between like that 45 and 55 level.
Mhm. Right.
It's an advantage because most humans just physically cannot run that kind of a system because they're going to get tripped up when they lose their trades, and the whole thing unravels. So yeah, I think it's a complete myth like, oh, you're getting better at your trading, so like now your win rate, now my win rate is 85% or 90%. This is all probabilities, and like none of us, when we place a trade, none of us know what the outcome of that trade is going to be. So it's just kind of like my trade is placed. Let's see what happens. Like let's see what the river brings. And then
Mhm.
sometimes it's
Yeah.
good, sometimes it's bad. You just have to roll with it.
So cool. Yeah, I'm just looking at some of the comments that are being made here. Chris says Christopher says you guys are all exceptional. Thank you for helping teach us the rest
Oh,
of it.
great.
And then Caleb's talking about he's hitting a win rate right now of 48%. And then he talks about yeah, what's the difference between a trading plan and a business plan? I'll just throw that out there for both either you or Mike to answer because that's one of the ones that Alberto asked.
Yeah, I think they're kind of the same thing. Like yeah, your trading plan really is like a roadmap for how you're going to interact with the market.
Right.
And I think like, say if you're just like, you were just sat at the screen, you've never traded a day in your life, and someone just says like, here's some money, trade it. The behavior is going to be very random. So
Mm,
as a trader, like if you're like, I want to actually do this at a high level, you want to make sure that your trades are not random. Like
right.
the more random things are, like the less edge you have. And what I notice with people as they progress in their trading, there's less and less types of trades that they're willing to take. Whereas
Mhm.
like someone that's newer, usually it's like, oh, that stock's moving up, like boom, I'll trade that. Like, oh, this one's going down, like I'll short this. Like, and it's just kind of like they're willing to go anywhere and do anything.
Yeah.
So yeah,
Yeah.
having a plan, it's kind of just defining like this is not like a random endeavor. Like there's a specific roadmap I'm going to follow, and because I'm doing specific patterns of thinking and trading, I'm going to get results that are differentiated from just like a random result.
Mhm.
So yeah, I
Yeah.
think they're kind of the same thing.
Yeah, I actually think that we're on the same page too. Alberto and I know each other. He's in our program. Well, one of the things that I say is that like I look at a trading plan as here's your specific trade. All right, so I'm defining. I'm going to enter here. My stop is here. My targets are this way. I'm going to size, and here's how I'm going to manage a trade throughout. Versus the business plan being more of like, well, what you were just talking about, where you're thinking through, okay, here are the types of setups I'm going to trade, here are the asset classes, the markets, here's my emergency plans if power goes out or something like that. Have all that thought of, and then when things hit the fan, which of course they will, we know exactly what to do, and we're not all over the place.
Yeah. Yes, that's really funny because each one of us, successful traders, each one of us look at things a little bit differently. Because mine, Mike, from that aspect, is I look at the system, the strategy, and the tactic. Of
Mm-hmm.
course, I think that's probably my military background,
Oh, sure.
from all that
Yeah.
time in the Navy, and a long time ago. Anyway, so cool. So what metrics do you use? And just a real quick on this one, what metrics do you use or should traders prioritize instead of just the win rate?
Yeah. So one quick last point on what we were just discussing. I think having like a trading plan and a business plan where it really helps is that as traders, we're all going to experience everything. So like we're all going to experience a hot streak where we win 10 trades in a row and like
Right
it
on.
all works perfectly. Even if you're a beginner, you're going to experience that. We're all going to experience the negative streak where we lose 10 trades in a row. Whether you're
Mm-hmm.
good or bad, it's all going to happen. We're all going to experience the sideways. It's like what you guys were saying. Like if you have these things mapped out ahead of time, then when that like negative streak comes or like the adverse events, like what you were saying, like, oh, if your power goes out, like you have something to fall back on and you won't panic. Because like
Right
when you
on.
panic, that's usually when things go south. So yeah, it's just we're all going to experience everything. But yeah, in terms of metrics to use, are you saying like indicators or like things to look for in the market?
No metrics like okay, like a lot of people want to know what their expectancy is of their system and all that type of thing, which is very I think a very important thing to know. And so, but it's just not based on win rate.
Oh, I
Uh,
see.
and how would you coach in? I'll modify the question slightly. We recognize that win rate is less important, probably definitely than expectancy, but for a since we are hard humans are hardwired together to you know basically try to avoid losses. We don't want to be
Mm-hmm.
a loser, and so having that kind of a mindset or attitude can force us into making bad decisions in the market because, well, if I hold on to this position long enough, it'll eventually turn around, that kind of thing. Bad mistake. Since we're hardwired together, what can we, how can we change our beliefs to accept that, yeah, I may lose 60% of the time on my trades, but the 40%, so how do you basically work on the mind shift to
Yeah,
accept
so
that?
yeah, that makes sense. So I created a tool. It's called our Path to Victory Trading Calculator, and it's something originally I made in Excel. Like anyone can do this in Excel, and I turn it into like a little web app. But really, the main things that I focus on are my win rate on my trades. And you're never going to know it in advance, but like you can maybe plug in something for yourself if you're building a trading plan. Like, okay, I'm just going to assume I'm going to have a 50% win rate, for my business plan.
Sure.
And then from there, beyond the win rate, then you want to think about your reward to risk ratio that you're going to go for on your trades. So, like, maybe you're like, okay, I'm going to shoot for a 2-to-1 reward to risk ratio. In order to achieve that, really all you would have to do is like, if my target is 10% away from my entry, I want to make sure that my stop out point is maybe 5% away from my entry.
Right.
And then, therefore I have a 2-to-1 reward to risk ratio. So yeah, win rate, reward to risk ratio, and then your position sizing that you're going to use. And you can essentially do like little simulations of like, okay, if I had, these parameters, like, and I did 100 trades, like what would my result be? And I think that's a very useful exercise to get people to believe that, okay, I can do this even if I only win half my trades, it's still going to work out. Because I think a lot of these concepts, people have to believe in the concept in order to, change their behavior.
Right
And
on.
it's super important.
Right on.
Yeah, we were actually talking about this tool, the Pristine Capital Path to Victory Trading Plan Calculator, in the Discord group that I have. Alberto was kind enough to share it in our group. Dennis, I'm sharing my screen. I have the calculator up. If we want to share that, I think that I love stuff like this. I think this is awesome.
Yeah.
So one of the things that I've studied is that if you, depending on your win rate, there's statistically speaking, over 100 trades, over 200 trades, you could start to figure out, well, what should my win streak be? What should my losing streak be? And just the randomness, right? So if you have 50% win rate at some point during the year, if you trade about 100 or so trades a year, you should probably expect to have a losing streak of about 7 or 8 trades in a row. And that'll be normal. Right? So
Yeah, so the crazy thing about that is like it might happen to you once a year. So when it happens to you, it's going to feel like, oh my gosh, like I was totally not ready for this. Like, the last 10 months everything was going great, and like boom, then it hits. So it feels like it's not normal, but then like we're mentioning here, like if you're thinking about the trading in terms of a business and like you're thinking about it in terms of years, it is very normal for it to happen maybe once or maybe even twice a year. So yeah, just being prepared for this stuff helps.
now, when the streak starts, do you start to scale down or start position size any differently, or what do you do?
Usually what I do is rather than sizing down, I start trading less. Like that's usually my
Mm.
defense mechanism is like, it's kind of like you want to go limp. Like that's how I think about it. Like once you start getting that adverse event, we all have the urge to fight back against it. And like, okay, now I'm going to take a trade twice the size or whatever it is. When things start going not well for me, I just go, okay, I'm not really seeing this right. Like, hey, I'm having bad experiences on these trades because every time I lose a trade, it's always a
Mhm.
bad feeling. Like I don't like it.
Mm.
So it's
Mm.
like, hey, if I start trading a little bit less, like at the very least, I'm going to stop experiencing this bad feeling of losing. So that's typically what I do. I slow things down a bit, but I think sizing down also really works. And I think that's something that I want to start doing in the future,
Yeah,
where like just take some size off and do it that way. I think both are really good.
I like that. I like that. So, hey guys, we need to jump into the rapid fire questions that we've got for Andrew. Now these are the questions that are just so off the cuff. You're gonna just blow your mind. No, not really, not really. But anyway, the first question, and I think a lot of people are asking this question: how does your approach to trading change when you're competing in the U.S. Investing Championship compared to your regular routine?
Yeah, so I think it definitely changes everything because okay, I'm going to be putting my results out every single month and people are going to see this stuff and whatever. So on the one hand it makes you more cautious because you don't want to have like a crazy drawdown or anything like that. Um so it really shows you like, okay, I need to have a plan going into the year. So what I typically do, like that path to victory trading calculator, every single year I kind of create my little plan that I'm going for. I include like my position sizes and whatever. I always print it off for myself. And that way I
Mm,
just have it. I don't necessarily look at it every day. There's long periods of time I don't look at it. But just knowing like I've got this little piece of paper, like this is my plan, like it really helps. So on the one hand, you really want to be risk conscious and follow your trading plan, but this is an absolute return competition. So on the other hand, I also increase my sizes to basically like the highest that is comfortable for me. So
okay.
for me, like the highest level of comfort is like a 25% position size and like my A plus setup. If I was not competing in the contest, I feel like I would take things a lot easier and I'd be like, okay, 10% positions. And it just makes everything like that much emotionally easier to execute. So I think that's like another thing as well. Like as you progress in trading and like as you grow your account and all this stuff, you can actually like scale back your risk. And then as soon as you start scaling things back, then it's like, okay, my longevity just increased, my chance of survival is increasing, like,
Right on.
my account is growing. I'm still going to be making the same dollar amount if I'm executing well, but I'm just safer. So I think being in the contest, you push yourself a little bit more to those levels where maybe things are a little bit uncomfortable. So yeah, that's kind of like the reality. I mean, I could just
Yeah.
BS you guys and say it's all the same, but I just want to be
Mm,
honest.
uh,
Well,
definitely
we
appreciate
yeah
that. Well, when you're on a podcast called Trading Truths,
yeah,
that's
and
a great thing.
we wouldn't have let you get away with that.
Yeah.
Because we have this BS monitor that basically it's a gauge and it says and it'll go off and make really bad noises. But with that said, just for clarification, when you say you go to a quarter position size, in other words, what that means is you take 1/4 of your capital and put it into one position. Now, are
Yep.
you going and utilizing a certain level of margin? I know that with this particular division, you can do futures, you can do options, and that type of thing. So, what's your mix on, futures, options? Oh, and the other thing you said, very important, and I think that this would benefit a lot of folks, is you said you wait for that A plus setup and trigger to do that 25%, where you go in with a larger number, right?
Yeah. Yeah. So for me in this division, I trade options, and primarily I'm using the options on like really big mega cap stocks.
Okay.
Um, but yeah, for me, I never use margin. That's the one thing. Like, I've just never felt comfortable using margin. Like, I've just never really done it. So for me, it's like I don't want to start. So like, if
Mm,
someone beats me because like they used options and then they also like quadruple leverage themselves in their account, that is a okay. Like, I never want to just use someone else's money. I don't know. It's just a weird thing. But
yeah.
yeah, within my own capital, I do push things pretty hard. So like, yeah, a lot of times I'll work up to that 25% size. A lot of times it's in multiple entries. So I find that helps make it a little bit safer. And yeah, when I get that A plus setup, like Alibaba was one earlier this year where I used call options to trade that stock.
Okay.
Especially because there was like the delisting risk. So it's like anything you put in that thing could go to zero. So yeah, I try to use the options, try to use the common stock. At this point in the game, I'm pretty much only trading common stock now, just because I kind of want to sort of like coast into the end of the year. Like, I'm sort of done like pushing that pace and that sort of stuff. So yeah,
Mhm.
it just varies, but I think everyone has a different psychological threshold. Like for me, I have the ability to take on a lot of risk and still be okay. Whereas other people, like, they might not have that same psychological makeup. So it's really just all personal preference. Like, what I always tell people is like, if you enter a trade and you find like you're just so uncomfortable and like, oh, my stop is 6% below my entry, the stock's down 2% and I'm freaking out. Like, you just know your size too big. So just go a little bit smaller. And rather than like prescribing like here's the position size everyone should use, I recommend finding it that way. Like, just finding what feels comfortable and what doesn't feel
Yeah.
comfortable.
So, Alberto asked a question: do you sell option premium? And I know in the championship, I don't know if I thought you had to be long options. You can't basically sell the premium.
Yeah, you can sell premium, and I do it quite a bit. So like what I'll do, it's one of my more like defensive maneuvers where like if I am interested in getting long a stock, well,
Yeah.
like, the market's kind of iffy. I think the market might go sideways here. Or like, I really want to push it, but I think the market might actually go down here. That's when maybe there, instead of buying the stock, I'll sell a put option. And really what that's doing is, I will buy the stock. I'll be obligated to buy the stock if it moves lower. And then, if it doesn't move lower, I'll just keep a premium. So
Right.
I do that, but I never do like, I'm selling naked calls or, nothing like that.
Mhm.
Sure. Yeah.
That's
So,
awesome. I do the same thing. Do you? Which puts do you sell? Well, what expiration?
Yeah,
Are you
so
looking out a week, 2 weeks, longer? What do
I
you do?
usually go like either a month or a month and a half out. So yeah,
Okay.
maybe go a month, 2 months out, whatever that looks like. And a lot of it too depends on like the implied volatility in those options.
Right
So
on.
Tasty Trade, they have a lot of really good premium selling concepts that I picked up over the years. Great educational resource for anyone that's interested in this style of trading. But yeah, that's primarily what I do. Sell like maybe 1 or 2 months out. Usually I'll be selling something at maybe like a 30 delta on the put options. And then from there just kind of, see what happens.
Cool. So Mike, we've got enough time for one more question. So your choice, Mike, of all the other questions that are out there.
I'll gotta go with what's the best piece of advice you've ever received about trading? And well, yeah, well, what's the best piece of advice? And well, what do you think would be great for people listening here that are
Yeah.
Yeah.
mostly part-time trying to get things going?
Yeah, I think, it's no one wants to hear this, but yeah, I think taking things a little bit slower, like really thinking about your trading, like think about
Mhm.
like where do I want to be over the next 5 years, like over the next 10
Good.
years, because you can't really achieve this in 1 year. Like you can't achieve it in 1 month. Like all that stuff is nonsense. Like if your goals are like you're optimizing for the next month of trading, you're going to miss out. Like you really have to optimize for like the next 5 years or the next decade, and then things get a lot easier. Like I see people all the time, they're really focused on like, I have to win this particular trading session. And it is just the worst. Like sometimes you have to lose some trading sessions and you're almost like sacrificing them to try to put together a good year. Or like,
Yeah.
hey, I'm going to sacrifice going for a little bit more upside because like I really want to, do well over a longer period and I'm focused on that and like I'm okay where I'm at. So yeah, just think about play the long game. Like it's the only way to win. Like I promise everyone watching this, like the only way to do this is if you play the long game.
Right on. Right on. So yeah,
Couldn't
it's
agree
one of
more.
those things. It's one of those things of I personally believe to learn how to be a really great trader, you have to learn how to be a good loser or a proficient loser, if that makes sense. Huh?
Mhm.
So, hey guys, well, Andrew's journey proves that success in trading is about discipline and trading a process. And Mike, what's your thoughts on that? And as we wrap up, if you found this episode valuable, remember, don't miss our next conversation, which is going to basically where we're going to explore why not knowing market history could be costing you big profits. And John Pocoroba from the Ring King is going to join us on that. But Andrew, anything you want to leave the folks with?
Yeah, just play the long game, give it your best. We can't control the outcome, so yeah, just keep putting one foot in front of the other. And yeah, thanks so much for having me on. I'll definitely be tuning in to your next episode. So yeah, really
Cool.
appreciate it.
Thank you.
Yeah.
Mike, you got anything?
Yeah. Thanks so much, man. This has been fantastic. I can't wait to go rewatch this episode myself over on Spotify, the Trading Truths podcast.
Right on. And so you can join us. And also, Mike and I float this out on our YouTube channels, 2 separate YouTube channels. And of course, it's broadcasted to Spotify, it's broadcasted to uh, X, and also in LinkedIn. We're out
Yes.
there broadcasting it right now. And
And
so,
Andrew,
okay.
where can people find you to get more information on you and everything that you do?
Yeah, find me on Substack, pristinecapital.substack.com. I'm also on Twitter. It's at realpristinecap. So yeah, thanks so much,
Okay.
guys.
And what I'm going
All
to
right.
do, guys, is as we get this posted, we will put Andrew's contact and how to contact him in the description, so you won't have to go searching for it. We're going to put it there where it's easy to find. So that's it for today. Aloha and God bless everybody. Andrew, hang on.